Hey guys, what's going on? Welcome into the video. So we have a pivotal week ahead for the stock market with the January CPI release coming up on Tuesday. I have a ton to get to in this one, including expectations for that CPI event, key levels to watch for the market, and long and short trade ideas for the week and weeks ahead. As a reminder, there's always timestamps in the description for those who want to skip to those specific parts of the video. And without further ado, let's go ahead and get on into it. First up, let's talk about the CPI release on Tuesday morning. So this report is what's pretty much going to dictate all price action in the next week and beyond. And right now, the bull case for stocks revolves around inflation going down towards the Fed's goal, which can then lead to a pivot in rate cuts in the future. The major risk here, though, is inflation taking longer to go down, because if so, rates will stay higher for longer, and there's a lot more bear scenarios than bull scenarios overall. So the two major bear cases for stocks are, number one, stocks are not cheap here. Based on the risk-free rate, the S&P is more expensive than it was at all-time highs currently. And number two, there is likely a looming recession, and we will see earnings get much worse in the coming quarters. Something interesting to note is based on the new CPI calculation, which started on Friday, inflation numbers are actually looking a lot worse. Originally, the December CPI number came in at a decline of 0.1% month over month, but the new revised number would put this at a positive 0.1% month over month. A question that we have to ask ourselves is, if the positive 0.1% number came in a month ago, how much lower would stocks be right now? The new CPI weights shows a lot less deceleration than before, so certainly a different picture being painted here, and something that the Fed will take note of for sure. So getting into expectations for next week, the consensus for month over month inflation is 0.5%, year over year is 6.2%, and then core CPI, which is inflation without food and energy, is expected at 0.4%. Now taking a look at the estimates from the Cleveland Fed, they're personally expecting CPI to come in at 0.65% month over month and 6.48% year over year. So they think CPI will actually surprise to the upside. And to keep it simple, there is a good chance that the market sees a big dump if CPI comes in at 0.2% or more above the expectations. Now taking a look at the S&P futures chart, which I like using to give me the best picture of the overall market trend, chances are if the S&P is going up, the heavy majority of the individual stocks will be going up as well, and of course the opposite if it is going down. So on this chart, these are the most important trend lines to watch. It's currently building out this bull flag pattern, and it's easy to lay out the technical bull case here if CPI does come in lower than expected. A break above that upper trend line would likely send the market on the next leg higher. But on the downside, the most important trend lines to watch are the long-term trendline resistance, which now becomes support, and the rising trendline support off of lows. These come together in the 39.70 to 39.90 zone, and that zone becomes a must-hold support for bulls to keep this rally intact. A break below there and this market could get real bloody real quick. So now let's take a look at a few more charts and indicators that show just how important this week ahead is for the market. In the past year for the S&P, this has been a very common pattern. A break above a previous swing high plays out before turning into a false breakout and starting violent sell legs down. Will this time be different, or will we see the same pattern play out once again? Next week will likely be the deciding factor. The S&P is also at a pivotal level on the monthly chart. This has been a spot that triggered big down legs, and the bulls have failed to close above it for 7 straight months. For a full market reversal to play out, bulls will want a monthly candle close above this line at about 408.7. Now taking a look at the VIX, aka the fear indicator, this is starting to bounce off the 5-year-long trendline support. Zooming in, it is also attempting to break out of this falling wedge pattern, and it's also testing the 50-day moving average, which has rejected 7 different times in the past 2 months when it's been tested. A close above that level could mean a trend change and pain to come for the market if it does play out. And one more VIX chart, this is also showing bullish RSI divergence, and that is when the RSI is rising while price is falling, and is an indication of upside to play out next. Another important indicator for the broad market is the US dollar. As we talked about a couple weeks ago, this is inversely correlated with stocks. When the dollar is rising, there's a good chance that stocks are falling. The dollar backtested this major long-term pivot zone and has so far reacted strongly with a strong bounce. Zooming in, it's also breaking out of its falling wedge pattern. Taking a look at another chart, the yields, this is another caution sign for the market. The 10-year Treasury bounced right off the 200-day moving average and is breaking out of its bull flag or falling wedge pattern. Zooming in, it also reclaimed above the 50-day moving average, which was previous resistance and is now acting as new support. And zooming out to the monthly chart, in the broader view, this looks like a healthy pullback more than anything before continued upside for yields. And now technical analysis is not everything, but these things are certainly important to take note of. Like we were talking about with the futures chart, this trendline is the most important thing for the broad market direction. As long as the S&P is above this, buyers are still well in control of the broader trend. A possible scenario though would be something like this, where the trendline gets back tested, holds as a higher low, and the market continues higher from there. The real technical bear case would only play out if that trendline fails, which if so could look something like this. Revisiting lows would be very unlikely in my personal opinion. Of course, we have to weigh every potential scenario, and if that trendline breaks, that is when real blood could come in for the market. Alright, so now let's talk about a few individual trade ideas, and we're going to start with going over 2 ideas for a short or put option play. So first up is Nvidia, ticker NVDA. This thing has had a massive rally off of lows, a lot due to hype around the AI sector, but overall is very irrational in my opinion. On the technical chart, this rejected right off the gap fill and is looking pretty toppy here. Fundamentally, it's trading back at above 18 times sales, which is super expensive for a semiconductor company, and no company should be trading at that multiple that is supposed to grow revenue only 0.1% next year. Not only that, but their earnings are expected to decline big time in the coming year, as I highlighted below. Based on the current price of $2.12 per share, this is trading for a forward price to earnings ratio of 65 as well. At the very minimum, this is a setup for a sizable pullback in my opinion. Alright, so next up is Tesla stock, ticker symbol TSLA. So as we know, this thing had a 100% plus rally off of lows and is now back in the danger zone in my opinion. And don't get me wrong, I'm no Tesla hater and actually was talking about how I liked it a lot in the low 100s, but this is another name likely setting up for a sizable pullback next in my opinion. Zooming in here, this topped Thursday at just about $5 from the major trend line and closed back below the key $200 level. This formation is also an evening star pattern, which is a topping signal and is indicative of downside to come next. This is setting up for a pullback phase next in my opinion, and I personally think this sees $180 at the minimum, potential for a deeper pullback to the 140-ish to 160 zone. Alright, so the next trade idea we're going to talk about is with Boeing stock, ticker symbol BA. This has been consolidating in the same tight range for 25 days or 5 weeks straight, and the longer and tighter consolidation phase is, the larger the breakout move you should expect to play out next. I'm watching this as a long trade on a break and hold above 215.5 or potential short trade on a break and hold below 203.5, and would expect a 10% plus move to play out in whichever direction it breaks next. So that is everything that I'm watching for in the week ahead, including the super important CPI catalyst, along with some individual trade ideas and some charts that are important behind the scenes, such as yields in the dollar index. Hope you all enjoyed and hope I provided some value to you. If so, make sure that like button and subscribe button. Would greatly appreciate that, and it helps me out a lot. For anyone interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, ask me any questions, nightly watch lists, and more. And I will catch you all next time. Thanks so much for watching. Peace out.